Hi, everybody. It's Jessica Stone at Stansberry Research, and I'm here with James Early of Stansberry China, who, of course, is been really following what's going on in the Nasdaq. And James, the Nasdaq has just issued a change of rules in terms of who can list. What do we know about the changes in the rules and the problems they're trying to address?
Well, officially, Jessica, the rules don't mention China at all, but implicitly, they're all about China. On paper, they're basically saying if you're going to do an IPO, it has to be for at least $25 million or at least 25% of your business, meaning you got to be big and serious. And at least someone on your team has to be familiar with U.S. accountability and transparency laws. And if you don't have that person, you have to have a consultant. This is basically NASDAQ trying to get ahead of any official regulation, which hasn't come from the U.S. government. And we've been waiting a long time, saying, look, we've got these Chinese frauds in the U.S., and there are legitimate companies too, but NASDAQ is trying to offer a degree of investor protection that's not currently in the system.
Should we take anything or draw any conclusions from the fact that this is happening the same week that the NASDAQ delisted the sort of highest profile Chinese fraud, Luckin Coffee?
Basically, for the last 18 years, every company that's public in the U.S. has to follow Sarbanes-Oxley investor protection rules by being audited, and they have to let their audits be auditable by the Public Company Accounting Oversight Board. And every country where there is a U.S. listed company domiciled complies with this except for China. So these Chinese companies couldn't comply even if they want to because they're restricted by the government. So, we've got a system that's inherently not equal. It's been not equal for 18 years, and there have been a lot of frauds. The only concern I have right now is that this is a very legitimate move towards fairness, but it's going to be packaged as just a pure jab at China. And that's what it is partly. That's part of the reason it's happening right now. But I also want to be clear, there's a very legitimate business reason and investor protection reason to require all companies to follow these same rules.
So just to underscore what you're saying, you want to be clear that even though this is happening the same week that Luckin Coffee got delisted from the NASDAQ, you think this has been a long time coming and it's not just retaliation, basically, by the NASDAQ.
Correct. There have been bills for a long time. There have been people complaining about this for many, many years, Jessica. And yes, it is not a coincidence that finally, this week, we've seen NASDAQ taking action. We've also seen the Senate pass a bill, which may eventually become a law, may not. We don't know. But this is happening now because of the timing, yes, but this has been a long time coming.
You and I have both kind of combed through the documents that the NASDAQ put out to look at the rules, more specifically the steps they're asking companies that are going to list to take. What do you believe these will help investors be protected from? And do you think that they'll really protect investors from the kinds of frauds we've seen, not just in China, but other countries as well?
I admire the spirit, but they basically have a lot of one-off changes that they can do, a lot of discretionary judgments they can make. They're putting a lot of burden on themselves, in other words, to do investor protection. I'm not sure how practical that'll be in real life, but certainly the spirit is well aimed.
And the spirit is really something that we should normally see adopted by the Securities and Exchange Commission, the SEC, the U.S. regulatory body that should be overseeing this. But we haven't seen the regulation come from the SEC. Instead, we're seeing it come from the exchange, which is sort of backwards, right? So what do you draw from that fact?
Yeah, I think this should be embarrassing to the SEC that NASDAQ beat them to the punch. Because, even in Congress may beat them to the punch as well, and finally SEC will be compelled to act. Jay Clayton, by the way, head of the SEC, was one of Alibaba's IPO lawyers. So he's more connected to China than most, but arguably he should understand some of this as well. Yeah, there's no other way around it. I mean, this should have been clarified and codified long ago, but one of the beauties of a private market is sometimes the private market comes up and offers solutions when the government doesn't act.
Well, our thanks to you, James Early, for a closer look at the new rules on the NASDAQ. And if you would like to see more content just like this, please subscribe to our YouTube channel. You can also find us on Facebook, Instagram, and Twitter. That's all for now. Thanks for watching.